Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
I'm glad to hear it. I'm all hot and bothered, and it's not just the nickel price doing that to me. The temperatures are quite excessive here in Europe at the moment, but we crack on. Wearing T-shirts.
Excessive here today, so thank God for air conditioning. So
we don't have any of that. So anyway, so I have a low rent T-shirt today. It's far too hot. My standards have dropped, but not when it comes to reporting in the world of nickel. So, so what do we need to know? What's happening with price out there?
Yeah. So, last time we talked, nickel price was down 5%, touching back to the lows we'd set earlier in the year. And now we're back up 7%, back up to the 16,500 range, $7.50 a pound. And so, interesting thing is, though, I think we're, getting close to bottom here. Something we've talked about for the last 18 months, 24 months is around what I call the Great Compression. That was where, because we didn't have enough conversion capacity to take laterite ore and turn it into class 1 products, you ended up with these massive discounts blowing out for some intermediate products. And so now as the bottleneck moves from processing capacity back to the ore where it should be, we're starting to see the collapse in some of those discounts. So, nickel pig iron, just in the last 2 weeks, the discounts narrowed by 25%. We're seeing sulfate at a small premium. Again, I think that'll end up being at a small discount on a long run basis. But, the good thing is, we're seeing NPI prices move higher. That's driven by ore tightness in Indonesia. Again, all of this doom and gloom about, Indonesia's flooding the market. Well, it turns out, they're trying to control. And one of the interesting stories we'll talk about in a second sort of emphasizes that. We saw stainless inventories decline. Stainless prices ticked up a little bit. So, I think we really are, sort of forming a bottom here, and we should be back on track, towards our $20,000 ton forecast, for year end, which I, said back in January.
Staking reputation on it.
Yes.
3 years in a row, can it be 4? Let's see. So we shall soon find out. Right. Okay. Well, let's talk about that story, actually, because APNI, which is the Indonesian Nickel Miners Association, strangely enough, made an announcement yesterday.
Yeah. So sometimes there's sometimes some big talk, but not necessarily always followed through with action. But this week they announced that they're going to create an Indonesian Metals Exchange, for 2025 to have an Indonesian determined metals price. They want to decouple from the sort of the swings on the LME. And the key piece here is, we'll see, whether that comes, whether that actually, what kind of form that actually shows up in. But, what I've been saying all along is, Indonesia wants to manage or to maximize the revenue that comes from, from this limited resource that they have. Limited, again, they've got a lot, they have a lot of resource, but it is finite. And so, it's in their interest. Most of the ore is actually mined more by Indonesians as opposed to Chinese companies. The Chinese companies own all the big plants. And so, the Indonesian ore is traded at a premium to the government reference price all year. They continue to import ore from the Philippines. So, again, they are the ONEC of nickel, one country. And so, I think this is them starting to flex their muscles, and I think we'll see more flexing, over the next 12 to 24 months.
Okay, well, let's talk about two things there. One is obviously, what's that do to, what does the IME do to the LME, do you think?
Yeah, I think, the challenge is in terms of, whether they can attract sufficient liquidity, and how do they keep foreign traders from just trading and arbing the nickel price between Indonesia and there. So, again, whether that ends up as an actual, exchange or basically just a set of reference prices that the Miners Association decides to post themselves, we'll see where that comes. I think it'll be likely more the latter than the former, which won't take any volume away from the Shanghai and LME exchanges.
Right. Okay. And then I guess the second point is obviously you talk about they don't have finite resources. They do want to maximize the margin that they make on what they've got. Why do you say or suggest and believe that that means that they're not gonna flood the market? Because if you look at what China's done in the past with various metals, that's exactly how they controlled pricing and players in the market.
Yeah. See, the key difference is what China does. China basically owns the processing for a lot of minerals. Sometimes they have the mineral resources, but China is all about taking those raw materials and turning them into, higher value add products. So they're really focused on providing the cheapest raw materials to create these value added products. And that's where the Chinese economy benefits. In the case of Indonesia, they went from being a, economic basket case with big trade deficits, big current account deficits, to having big trade surpluses and big current account surpluses, largely on the back of nickel and stainless steel exports. And so it's a cash cow for the country. It's the mining part the mining and processing part in country where they make the money. So it's not in their interest to have that price collapse, because if they're not making any money off those resources, then that's not really, a good thing for the country. And again, I think to underscore it is DeLong, who's behind Tsingshan, the second largest Chinese NPI. They've got a big operation in Indonesia. They just declared bankruptcy. So again, to all these people who think, oh, they're going to drive down prices to, these crazy low levels. Well, it just turned out one of the biggest, miners, processors of this material, just went broke. So, again, in terms of this floor around $750 a pound, that's a great place, for this market to be going forward. And again, too bad on operations that didn't structure themselves to operate at these kind of prices. But, in terms of those of us with projects that, have much lower cash costs than these kind of numbers, we're in great shape.
So that makes, I guess, people's belief that Chinese companies always are state-owned and therefore backed by the government at any cost, and therefore that's a problem for the rest of the world. And people like yourselves, competing with that. But here you go, second largest Chinese NPI and stainless producer declaring bankruptcy. That suggests that maybe the support isn't there. Maybe there is a chance for Western companies to compete.
Very much so. Very, very much so. And the other part too that's been interesting, I would say, over the last 2 or 3 months, as we've kind of had this bottoming really start to happen, we've had, a number of inbound calls from what I would say, good contrarian investors who basically, when something's out of favor, and they're now starting to take a good hard look at nickel names. So, I think things are, again, on multiple levels are setting up for, a good remainder of the year, from this point forward.
Right. Okay. And let's talk about other influences such as currency. What's that doing for you?
Yeah. So again, just to emphasize, the sort of the unnecessary doom and gloom. Again, if you read the headlines 8 months ago, you'd be thinking, oh, geez, nickel must be, just all-time lows. There's no way, prices are horrible. Well, we've talked about this before, but, normally when you see metal prices relatively high, like we're seeing in gold and copper, the US dollar is trading at a low relative to other currencies. In this case, US dollar is record strength. So when you look at nickel prices in Canadian dollars, you could do it in Aussie dollars or, most of the other commodity producing countries. Nickel prices right now, other than the last 2 years, are higher than they've been since 2011. Those are the facts. So as a Canadian based miner, who will, have all of their operating costs in Canadian dollars, it's tremendous. And again, what these, commodity currency prices are saying, we need more supply. Commodity countries start making more supply. So for those of us fortunate to have projects that can take advantage of it, it's I think it's going to be an interesting time period here going forward.
Right. Okay. So not all doom and gloom.
Yeah. Nope.
Not all doom and gloom.
No.
Right. Let's get on to company news. We're going to talk about 3 companies today. Should we start FPX Nickel?
Yeah. No,
making announcements.
I missed their announcement, talking about their last announcement last time. So they won just before our last call, and then just recently. So they're going through towards a feasibility study. So they're continuing to make improvements to the project. And so, again, identified several areas where they can, take out cost, improve the production profile, and reduce operating costs. So, good to see, good solid project, good solid team, and nice to see them moving forward as well. They're designing in now trolley systems. That's what we have with Crawford. It's using electricity for part and replacing diesel fuel, because we're getting the power for the trucks from an overhead wire as opposed to diesel. And that, again, just reduces the carbon footprint even further. BC, Ontario has a low carbon grid. BC has I think it might even be a zero carbon grid where it's effectively all hydroelectric. So, the ability for them to tap into that, makes a lot of sense. So no kudos to Martin and the team on making good progress there.
Okay, and onto LifeSite. We've been talking with them recently. They seem pleased with how things are going. What do you make of that project?
Yeah. So again, they just announced. So LifeZone has the Kabanga mine, which they acquired a while back. It's the highest grade undeveloped resource. It's been around since the 80s because it's in a fairly challenging location. But they seem to be doing a good job moving the mine forward. And as well, they're looking at doing a refinery. So they're going to take concentrate and convert it into product. So again, some lab scale results that seem to be working well. That's going to be the question mark. The use of hydrometallurgical processing in nickel has had a checkered past. So we'll see. We'll see how these guys make out in terms of advancing this project.
We shall see. We shall see. We're certainly going to be keeping a close eye on them. And of course, yourself, you continue to make announcements. What's your news?
Yeah. So two good, very, very happy announcements for us, over the past 2 weeks. So, thing to remember, right? We're still less than 5 years since the company was founded. We have an anniversary in about a month. But the key, so that we've got lots and lots of room still for further optimization. Remember, most companies take 10 to 15 years to get to the same point we are now. So, there's lots of things that we can do to continue to improve the project more. So first off, the East Zone was sort of the second zone that we drilled at Crawford. And, as we went through, it looked, more and more like actually the East Zone was better than what we called our main zone. And so we just completed a range of metallurgical testing because we're looking at, pulling more ore earlier into the mine plan. And to do that, we need to have additional test work to support having that ore go through during the payback period. And again, tremendous results. Lock cycle test, on a composite of a bunch of samples from where the starter pit will be. Delivered a 60% nickel sulfide concentrate, which would, we believe is the highest nickel sulfide concentrate ever produced, sulfide concentrate produced in a test like that. But most importantly, from an economics perspective, we did an additional 10 tests, and based on what's in the feasibility study model versus what we achieved, we did 28% better on average. So, that suggests that there's some upsides in terms of the recovery formulas. And again, if we're able to pull some of that ore forward, that should have additional cash flow benefits. The other thing is down along in the same vein, we identified this we call PGM zone that is on the boundary of two different rock types, all around Crawford, and we didn't have time and dollars to get it in to the feasibility study plan, but with the exploration dollars we had from Agnico, we were able to successfully drill that out. And so what that means is there's a bunch of rock that we effectively treat as waste that in the go forward Crawford mine plan, we'll be able to pick up, a not insignificant number of PGM ounces that'll be included in the mine plan. So again, some additional value, coming down the pipe on both these fronts.
Additional value and additional margin. Always good. Always good. Well, there we go. Like you say, it's been a pretty quiet out there. I think those who can do move forward, and those who can't, a little bit of a holding pattern, it seems. But summer is here. Let's see what it looks like when we come out the other side. Mark, appreciate your time today. Thank you very much.
Great to see you.